We have begun the third month of the year, and I think this is a very critical time for the market. Always around March, you'll see many people in the market try to make up for the first 3 months of trading. We're going to see more activity this particular month as opposed to the last 2 months, mainly because of 3 reasons. One is results are coming out, at least are bringing more interest in the market. Secondly, I think the market is stabilized now and many people are coming back in the market, fund managers, pension schemes. Probably we may see a big chunk of the foreigners coming back again because of the good results. And then thirdly, we are expecting, because of the competition or the fund management, as they report their results to the trustees, they're getting more orders and more instructions, so expecting more participation in the market.
Talking about results, East Africa Portland released their results at the end of this week. It is a pretty illiquid stock with only 6% of free trading slots. What do you make out of their results going forward, keeping in mind the yen-dominated loans that seems to have weighed down the net profits?
No, they've done very well. In fact, they've done very, very well. I mean, from 3.9 billion to 4 billion. In terms of turnovers, they've done very well. The cost of sales have really come down. If you look at last year, they had almost 1.1 billion loss arising from that exchange losses. This time around, it's only down to 58 million. So which tells you the currency has been a bit stable until the beginning of this quarter. The demand has been quite good across East Africa, all the way to Sudan. And I think as their own forecast, as they kept saying, they're going to do much more better. So I think going forward, if the shilling does not, for example, change a lot, they should be able to maintain this until the end of the year.
Another company that has also said they have been hoping to perform better is Samia Africa, and for the first time in a long time they've actually offered dividend payments. It's been hard hit by cheap imports and have been giving profit warning after profit warning, but finally we're beginning to see a turn of the tide for Samia Africa. What's your outlook for that stock, and what is it that they're doing to bring profit back to the company?
The outlook is changing. I think it's going to be very positive. And what's changing them is I think this initiative by KEPSA, the private sector, as well as the Prime Minister Roundtable, where they've been able to bring forth and curb the cheap imports that are the main culprit for them not being able to sell out there. I think that's working out. But also Samia has been able to diversify from their tires. Now they're doing BPOs, the business park that is coming through. I think some of these new initiatives are going to open more revenue lines for them. And I think if they're going to include all this, then it's going to be very positive for them, so that the tire business and this other business of the batteries does not really affect them very much. I think going forward, competition is going to be a key issue, as well as being able to fight off that counterfeit.
Very quickly, Fred, if we look at Standard Chartered, we expect their results before the end of this week. What are your expectations on them? Half
year, they were doing 48% better than the other year. Probably we should be expecting the same thing, maybe about 7.5 to 8 billion after-tax profit, which is good. In fact, the price has already factored in good results coming from that company. Maybe what people are looking to see in this particular result is how they've been able to sweat their assets in relation to the incomes from the core trading activity, that's lending, as well as non-interest income, but most how their balance sheet has grown, given that they didn't go to lending to the retail sector, and therefore they're not exposed to Safaricom and their loans. We're expecting their non-performing loans to be much, much more lower than KCB or Barclays.